All right. Good morning, everybody. Welcome to the official Trade Talk channel, where I show you how I analyze price for the most consistent and higher probable entries to help you all become better traders. Today, we're going to take a look at a few assets. I'm trying to get this situated over here. And maybe see if we can't find a trade to take this morning during the New York Open. So yeah, we're gonna talk about some of that stuff here. Let me pull this over here real quick. All right. So on Tuesday, we were talking about looking at potentially buying $402 puts on the S&P 500. What is that? We don't want that. We want this right here. So we were watching that area of potential supply, and that's where we were looking to take the short. We were also watching Bitcoin and thinking about taking, well, we did take a short trade on Bitcoin instead, and that ended up not being the best trade. The S&P 500 ended up later on in the day breaking down, but it doesn't really matter because when you buy puts, it's more or less, you can hold them if you buy them out further, like a couple weeks, 2 to 3 weeks out. Your puts don't get killed by time decay, so you can hang on to them as price is falling away. And as long as those puts are in the money when the option expires, then you're going to get the intrinsic value of it nonetheless. But anyways, you can see here at $402 is where we are looking to buy those. Right now, you're trading at $390. So when the market opens, you're going to be $10, a little over $10 in the money, which is on a SPY put. That's a fantastic return. They were trading for approximately, let me go to, we can't really get the exact option value right now. We have to wait for the market to open, and we'll see what the value of those puts are currently, because I know there are people inside of this live stream that will take these trades because the information that I provide on stream and on the Twitter is actionable intelligence. All right. So if you do want to take the trade, I have no qualms with that at all. As long as you know how to manage your risk and you know what you are prepared to lose, then you can absolutely 100% take these calls as signal. What we provide here on this channel is signal, baby. Pure, unadulterated signal. All right, so Bitcoin this morning, we already took a trade on it. I was watching intraday resistance right there, but we traded up to it perfectly and hit it. There was also on the smaller time frame, there was this supply zone right here. You see how this 5-minute candle opened at intraday resistance? For any, excuse me, for any new person to this channel, welcome. When I say intraday resistance, what I am mostly referring to is hourly resistance. So you can see here, there's that hourly bullish close. That is your resistance. The market treated it as resistance here. And this is when when I took my entry. I did post this trade on Twitter this morning right here. It was a little bit late. All right. But you could have still watched, this closure, because you did get a retest of that and taken the entry. So dropping down here into the 5-minute time frame. You can see here, this is that retest I'm talking about right there. That's the next hourly res. Boom. That was a flawless entry. Primary target was a little bit lower than that. Secondary target was yesterday's low. We have taken out primary targets from here to here. The risk to reward was much better than, say, from here to here, correct? Yeah. So what you would have been wanting to do is looking for, this was just basically intraday support. So if I move this target down to yesterday's low, that target then becomes a lot more further away. But I usually don't do that. I usually just take primary position off at support, as this allows me to get my risk out of the marketplace. So then I can just use unrealized gains to look for any downside continuation. It looked like a short today. Everything was lined up perfectly for a short trade. You can see here today's point of control coming in right under that intraday resistance. That means a lot of volume was trading at that price. And since you were trading as an inside day, I felt that entry would be lower. Here is the opening of your daily range. You set in a daily high on that open. That remained to be the daily high and is still the daily high. So that's a bearish. That's a bearish signal, right? When you set a high of day that early on the daily range and then price just continuously trades away from it, then we look for the retest to get short. We look for that downside continuation to take place. All right, so the daily low still hasn't been tested. So you can see how, this is the daily low right there. That's secondary target would be yesterday's low down here. Primary target was already hit. There isn't a short trade to take on it now because the range has already put in that downside expansion. And if we are looking for short entries, then that is what we are looking for, is a downside expansion. The DXY is trading to the upside this morning, which kind of helped us gain that, to assess the downside trade on Bitcoin. The risk market as well, trading off pretty good. Yesterday, I took a short on Euro USD and, getting prepared for a potential down move today. You're currently trading at daily support. This was where I took the entry. This was my profit target. All right, so if we go into the intraday chart, you can see here, this morning you got another opportunity to take a short on it. So if you would have taken that today, that would have been during what? The London session. That was also the high of day. So right here on 1700 hours, that is your daily open for Forex. So that would have been the high. Notice how in the London session, you took out the high of day and then instantly reversed. So that provided a flawless trade to the downside. We know that the London session usually puts in the high or low of day. And the way to trade that is if you're making a fresh daily high during the London session, you can just simply take the short. It doesn't always work, so you will be stopped out occasionally. So make sure you mind your risk. Make sure you're only risking, 1-2% max on these everyday entries because you will get stopped out. It's not a matter of if, it's a matter of when. We do not know what the market will ever do. We just know where to look for entries, the high probable areas. All right, so just kind of waiting. We got 4 minutes until the open. The short here is still on. I took profits when I stopped to break even. And so that's doing good. So a lot of trades we took. We're doing fine this week. Tuesday's trade on Bitcoin, I ended up closing it during the live stream because we did get an hourly and a 30-minute closure above the resistance that we were watching, and then it ended up being a trap. So the very next candle after we got off the live stream, ended up closing the position out. Some people did keep the position on, and those people were rewarded because it never did make a fresh daily high. So that trade never did get stopped out. It did end up working. It's just was not in it. So I did not get to take that opportunity. I generally like to exit my position if after an hour it's still trading at my entry. Because typically these entries that you will learn are such good entries that usually price is going to trade away from that entry rather quickly and get an expansion rather quickly because it's where the market is basically getting ready to leave from. So that's typically what we're looking for. So when the market dilly-dallies around our entry for over an hour, it gives me it just tells me that there's a high likelihood that I may be stopped out. So instead of eating a full stop, I just go ahead and close down the position. So that way I don't have to eat a full stop. I know there are opportunities inside the marketplace every single day because every single day a new daily range is printed on these charts. And since that happens, that gives me a high likelihood of being able to take a trade the next day. So you don't have to ever chase price. You get an opportunity every single day to enter a position. All right. Oh, Bitcoin is struggling a little bit here at this primary target. We're going to get rid of it because it was already hit. So now basically all we're watching is intraday resistance. I doubt you're going to get back up there, but if you do, then whatever I have on left will be stopped out. Naturally, I have 2/3 of the position on. Let me bring this over here so I can show you that trade right here. All right, so this is the Bitget platform. There is a link in the description. Please understand with what happened with FTX, any YouTuber shilling any exchange right now, it isn't really, I don't even know if you could even say it's kosher. But these guys are still trying to generate new business, and I do have, I do kind of work for them in a way. So this is the platform. It's a very good looking platform. My representative has assured me that they are safe, but like every other exchange right before they fell, they said the same thing. So it's the cost of doing business in the crypto landscape. If you want to trade cryptos because cryptos provide fantastic opportunities, then you have to risk amount of money on the exchange because you can't take a trade without using an exchange as an on-ramp to that position, essentially. So there will be a link in the description, and I will also pin the comment in the description. There is the market open. For anybody that does want to trade on Bitget, please use referral code XTSC if you do transfer funds over from cold storage. Just keep an amount of money on the exchange that you are not afraid of losing. So roughly, 1 to 5% of your total trading capital. 1 to 5% of your total trading capital. That way, if something was to happen to any of these exchanges overnight, you wake up and you can't log in for whatever reason, you only lost a small portion of your portfolio, the tradable, the risk portion, right? So anyways, that's what I do. That's what you should do. I leave the majority of my funds in cold storage. I have a Trezor, Model T, and a Nano Ledger. That's where my Bitcoin is. I have some funds on Coinbase, some funds over here on Bitget. This way I can enter and exit positions. But right here is the entry. I took the entry right here on this 5-minute push up into that hourly resistance. My stop loss has since been dropped down, but my stop loss did look like that. All right, so let me full screen this. So this is where we were trading today. So on this push higher, that's when I took the short market order right there. Stop loss above that right there. As we took out this swing low right here, I took profits. All right. So now naturally I can move my stop. Well, maybe here. I can move my stop down here somewhere so that way I don't lose any funds. Now this unrealized P&L right there, that will be lost. All right. If the price continues to go up and comes back to my entry, then that unrealized P&L will be lost. But as you can see right here, the trade has already realized P&L right there, $622 of realized P&L on this trade this morning. This is just it's not a demo account. It is real funds, but it isn't my main account. My main account is on the Coin M futures. I just been doing this as well. I take 2 positions, one here, one there. That way I can show you on the account that I don't care to lose, right? All right, so let's get back over to TradingView. Actually, no, let's pull up this here. so we can look at those 402 puts. All right, so we were talking about taking it on the November 25th expiration, and we were looking at the $402 strike. Right there is the $402 strike. On the day that we were talking about buying these puts, the puts were $5. So $5.40 something cents, $5.50 somewhere in there. The spread on these are very thin. You can see it's very narrow. It's only 2 cents. Every now and then it'll get up to 3 cents. But it was like $5.55, somewhere in that area. You have completely doubled the account or doubled the money that you bought the puts for. So when we take this risk with options, we're essentially risking the premium that we purchase. All right. That's how you manage risk on options. If you do it that way, then you don't need to put in a stop loss, because it's, in a sense, you're just risking the premium. So if you paid $500 a piece for the puts, then essentially that's the money you're risking. All right. And as of right now, like I said, since price is trading away, even though it was a very, very close, very, very close, as far as expiration goes, those puts are well in the money right now. So if you did buy those puts, I do suggest you sell them now, or at least a portion of them. If you bought multiple contracts, then you want to sell at least 2/3 of them and leave, whatever on for any downside continuation. That way you will completely remove all of your risk out of the marketplace. And moving your risk out of the marketplace is what we try to do. As that's how you get your equity curve moving in the up direction versus moving in the down direction, like most retail traders' equity curve does. All right, so that being said, let's go over here and we will start looking for anything that we can find here. SPY just now making an open. We don't want to take the SPX trade right now. That Euro USD trade is already over with. There's no trade to take there either. And this is why we don't want to take this trade on the S&P 500. Let me get this over here on full screen real quick. Basically, we are trading down to the area where we were looking for potential support. All right, this is the previous month's high. You can see here that October high is right there. So we broke out above the October high on this day. This was the CPI day that came out and showed that our inflation is now dropped down to 7.5, which is very good. That's what we've been waiting on since June, since the 9.1 print on CPI. We've been looking for trending lower CPI prints, and we have been trying to position ourselves long in anticipation of that. Right now, you can see that we are at 7.7. 8.2 was expected. So up here is your 8.2. Boom. That's a nice little drop. We want to continue to see this drop lower and lower. The Fed's target is 2%. So down here is the Fed's target. So they will likely continue to raise interest rates until we get a nice push lower on this. Now, they're also watching the unemployment rate, and they have a target of above 4. So anything above 4 is when then you can start to see that they will start reducing the amount that they're raising and maybe even stop hiking altogether. But they're not going to be dovish. All right. Not hiking interest rates and not lowering interest rates is not dovish Fed. It's a neutral Fed. So you will probably more than likely see the unemployment rate get up into this region before the Fed even, says, all right, well, we're gonna stop hiking interest rates and we're going to allow the market basically, we're just going to continue to be data dependent, essentially. So that's what we're kind of waiting on here. Just give my internet a second to catch up. Wasn't even gonna do a live stream because I couldn't get the Verizon modem to work. but I got my phone using it as a mobile hotspot. So hopefully that will work at least until we either find an opportunity or decide not to trade. But here, anyways, that's that October high. This is November 1st. So that is not October's high. This is this right there. So that's where we're currently trading into. When we were up here, I said to wait until we pull back to at least here before we start looking for buying opportunities. Now, am I going to buy this right now? No. And I'm going to tell you why. There is a ton of bearish momentum coming into this level. So we want to wait and see how today closes. If we close above 39.12, then tomorrow on Friday, we could potentially look for a retest of 39.12 if the market's trading up around in here. So what that means is today I want to see it slowly drift back up and maybe close up around 39.28, 39.30. And then tomorrow on Friday, we can look for a retest of 39.12 for potential bullish opportunities. All right. So not really an opportunity to take right now. If you do try to buy it right now, thinking that this is going to be the low, there is a chance you get stopped out because a lot of times the market will take out this low before then looking for support. All right. The market is always trying to hurt as many people as it can. Let's just see if we can even find how retail is viewing the S&P 500, how they're positioning themselves anyways. Where is it? There it is, US 500. So it's mixed. You got 48% of retail looking for shorts. You got 52% of retail looking for longs. That's, it's kind of a mixed bag. So there's no real signal just judging sentiment right now, but to be honest, I would much rather see sentiment be mixed instead of leaning heavily to one side. Because usually when sentiment is leaning heavily to one side, that's typically the side the market will go. So if most people are looking for longs, the market will typically go lower, right? Because it's looking to liquidate all those people. But we'll see if this area ends up holding a support. There is no daily supports under it or anything like that. You do have if you lose this area on a daily closing basis, the next area to look for potential support will be demand at 38.26. 38.26. All right. Bitcoin coming back up in to test this last bullish candle here. We'll see if that area acts as resistance or not. I think the majority of your downside push has already occurred today. So if you try to get short right here, please understand that you're risking the middle of the range, or actually more so the lower edge of the range, as the bulk of the money has already been made, all right, by the pro traders out there. We already have booked gains. We are done with that. So moving forward, SPY is just basically not doing anything here. So it does look to me like it wants to find lower prices. I just can't get short into support. And since there is that big major support level right here on the SPOOs, then that's suggestive that I can't take this short trade. All right. 39.17 is not much difference than 39.390 on the SPY. Right? It's about the same. So you're just bouncing off of support there. But it has been trending higher for a little while. I know a lot of people are looking at this as a bear market rally, or a profit taking move, if you will. But I truly believe that people were expecting lower CPI, and they are starting to reallocate capital back to the risk side of the fact, back to long SPYs or long risk. We know that there was massive buys that happened down here at around 365 and 364. So when price traded down to that, we were getting a little bit concerned, because if you do get under that 365 number, then we were going to look for potential downside pressure based solely on those two positions, because there were two positions taken with over a few $1 billion on both. I can't remember the exact numbers because that's been a little while back. But you can see how price traded right down to that, found demand at that, and ripped higher. So that's currently where we are. All right. So there is a uptrend inside of the overall downtrend. All right. You have trends inside of trends. It happens. It's normal. This could be a bear market pullback. So if you are looking to position yourself short, again, your next point of entry for short positions would be 39.66. You wouldn't want to see a daily closure above that, as if you do get a daily closure above that, then you're going to be watching 39.92 for potential short entries, expecting this to be a bear market rally. All right. Now, as far as the Bitcoin correlation goes with risk, naturally, we lost that correlation based on FTX. And I know a lot of people got hurt using FTX or having money on FTX. But something here, this is NBC, right? This is NBC. So I'm not trying to say that your pain isn't just or isn't as good as this guy's pain, but this guy's pain is bad. Now, this is NBC reporting, but Tom Brady and Giselle, which is his ex-wife or soon-to-be ex-wife, because they have marital issues going on right now. This probably has a lot to do with it, but I'm not going to speculate. Put their $650 million fortune into FTX. Now, I don't know if he's got any of that money back or if he ever will get it back, but that really sucks, especially because he's coming at the end of his career. Yeah, we were talking about it in the Discord. So, I mean, that's everything, right? Most people do it that way. That's not the right way to do this, guys. Crypto is a very new industry. These bear markets are good for weeding out all the bad actors. Eventually, that will bring in regulation. It will bring in more investment firms. And then we can see this business or this industry prosper as time goes on. But for the first few years, and make no mistake, 12 years is how long Bitcoin has been a tradable asset. 12 years is how long the crypto has been around. That's 1 decade. That's nothing. That's nothing when you think about how long people's been actively trading stocks and bonds and all that stuff, right? Very new business models, very new everything. No regulation, so it's essentially the Wild Wild West. Do not put all of your money into one exchange. If you want to be an investor in Bitcoin, then buy Bitcoin, right? Take all of your money and buy Bitcoin, but immediately self-custody that Bitcoin. Take it off exchange and put it into cold storage. Do that, right? Then you are net long Bitcoin, and the only thing that's risk to you losing funds is if Bitcoin goes to zero. That's it. That's it. That's not likely to happen. I know a lot of people think it is, but I do not. I am not one of those people. I do not believe Bitcoin will go to zero. In fact, when I look at Bitcoin's chart, I see nothing but love. All right. I see nothing but love. We go over here to the BLX index, hit this little circle thing here. This chart goes in one direction, over and up, over and up. That's what we want to see. We want to see charts trend from the bottom left-hand corner to the top right-hand corner. That's what we want in an asset to be investors in, okay? But you can't be an investor at the tops, which is where usually retail gets involved, is at the top, right? At the top. No, you wait for pullbacks. You wait for bear market rallies. These are the times that you want to be buyers. Right through here, this stuff, right? anywhere in there. It doesn't matter where, anywhere in there. Because as you can see, every single bear market that Bitcoin has had, even now, you're currently trading above all of them. Even now that we've lost 70% of the asset, even now, 76% down, you are still trading above all these other bear markets. So that's the way you want your investable asset to appear. You don't want to see it trading under these lows. That's not so good. Trading above those lows is really good, because whoever bought over here, even though they've seen 70% declines from the all-time highs, they are still setting really good. They are still in a lot of profits. A lot of profits. Not as much as they had, naturally, but they are still kosher. I bought on this stuff down here, bought over in here. That's this going to be a buyer here, right? You keep the cycle going. Boom, boom, boom. If you're buying the lows, you're doing all right. So, yeah, if you want to be a seller down here, then please understand that the majority of the short opportunity has already taken place. Like, we started talking about shorting Bitcoin in November 2021 based on the Fed and other things that were going on in the economy. So that's when we were a seller. Then there was a secondary opportunity that came in March, and I was alerting all of my followers, all of my subscribers. That's when you wanted to be a seller again. When you made a fresh 2022 high, you got an opportunity to be a seller there. Now that you're on the lows, this is not the time to be a seller. Now, if you're still short from those areas, that's okay, right? You're still holding that. You're doing good because you just made fresh lows on the year. So you're doing good. I don't see any reason to close that position. Probably wouldn't even close it until you get a monthly close above this resistance there, because that could be indicative that your run lower is done. Or you could do something as fancy as just throw a trend line on it. If you close a monthly above that, get out of the short position. But naturally, you should have taken profits multiple times already, because that was a freaking fantastic move. But I do believe that we're getting closer and closer to the bear market low than we are going to zero, right? We've already seen the dollar top out. Hear me out, right? We've already seen the dollar potentially top out. So this is when the bull market started for the dollar. This is a monthly time frame. This is a monthly chart. So we've already seen the dollar potentially topped out. It does still look like it could be a pullback, but I mean, from 114 down to 105, that's a pretty good drop. We've seen the USD JPY potentially throw in a top up here, and you've also taken out the last 2 bullish months worth of price action to the downside. That's kind of a blow off top, if you will. So we'll be watching 144.741 moving forward, and 148.73. Those are the two areas. If we get a monthly close above this 148.73, then this position stands or is taking a chance on being stopped out. But if this is going to be the top, right, for this, then it's safe to say that eventually this is going to find a bottom. So if you want to be a buyer now, I see no problem with it. Just make sure that you're not buying it with leverage. You're not, taking a very tight stop loss expecting to nail the bottom, because we're probably going to see a lot of shakeout moves occur before that bottom structure is actually formed. But since we have already put those tops in, or potential tops, now I don't know that it's going to be the top, but potential tops, as long as we have those in, I think that, we can start putting a little bit of Bitcoin back into cold storage. This is going to be the ultimate low here, right there. That price is $15,512, not far from that 13.8 old resistance level that we were looking for potentially to be a buyer there. And I will buy hand over fist down there. If it gets to 13.8, I will be a buyer with everything I can afford to be a buyer with. All right. So, but right now, I mean, for the day, you're trading inside of yesterday's range. Just means that's a choppy, typical day. The reason why I was targeting yesterday's low instead of yesterday's high is based on the daily structure that we currently have. I mean, you're trading pretty much under the midpoint of yesterday's range. So just with that fact alone, tells me that, that there's probably a higher likelihood that the market will stretch for yesterday's low before it stretches for yesterday's high. There are people that shorted this because this is Tuesday. This is when we were looking for our short position. This is the entry that we took right there. Let's get rid of this, the box here, volume profile. This is where I exited my position. All right, we sat in this damn entry for multiple hours waiting for this candle. So when we closed above resistance, I closed my position, and smart holders held the short because we were watching the high of day. That's where we marked our risk at, right? If you watched Tuesday's live stream, you'll see it all play out in real time. Yeah, we were marking our risk there, and we were just looking for a 2-to-1 risk to reward. So you can see that ended up being a 2-to-1 risk to reward. Ultimately, just as soon as you closed that candle, you started to drop. So like literally, as I closed out my position, Bitcoin then rolls over. That's usually the way it happens, man. Usually the way it happens. We know that traps exist. We know that. I could have taken the entry again after that, but I was like, screw it. I already took 2 swings at this thing. I'm not going to take a third. But if you took that position, kudos to you because you're sitting pretty. You don't have to do anything. I did have one of my members ask me where he thinks where would I move my trailing stop? Because he took Tuesday's trade and his entry is above $17,000. So basically what I would do is trail it down to today's high, or at least a little bit above today's high. I would rather wait for a bullish candle first and then trail it down to the high of that if you break away, because in my experience, trailing down above bearish candles doesn't typically hold very long. Because if Bitcoin comes down here and takes out this low and finds demand, then the next place it's going to go is it's going to be looking for supply. And supply will be above that high. There will be supply there. There is also supply there, right? So Bitcoin could just liquidate today's high and then roll over again if it is searching for lower prices. If it's searching for demand, it could take out this high and then go lower. So there's no perfect science to using trailing stops. Since we can't see into the future and since we never know what price will do, you just have to use an educated guess. So like I said, when I'm trailing stops, I would much rather trail them above bullish candles highs if I'm in a short position. So I haven't really started trailing the stop on this one yet, but if I did, this is the last bullish candle before the drop. So that means at the very least, that makes that bullish candle's supply. So you could trail that stop there, right? Just right above that bullish candle's high, not the bearish candle's high, the bullish candle's high. So that way, if price comes all the way back up to here, takes out that swing high, then something else is going on more than likely, because this is a nasty drop. So yeah, or you can use higher time frame charts. Throw those highs over monthlies when they happen, right? So wherever this month closes next month, if you get a pop up to here and then rolls over, then you can trail that stop all the way down to that month's high and then just do it like that. There's no perfect science for trailing stops. Just do it wherever you feel comfortable, because if price gets back up there, you're going to be stopped out. So just keep that in mind. All right. So going back over here, see what the SPY is doing today. Getting ready to drop back down below the low of day. So you're going to be right on the day again. 15, 20 minutes of up. And now you're getting that pullback. So let's see if support builds in here. Support builds in here. Maybe we could take a swing. I don't like buying it this early. I think your trade tomorrow, or where your buy will be tomorrow, if it is a buy. Do you guys have anything that you want me to look at? Short Sol. Yeah, you can. I mean, but I think anything dealing with FTX is over, right? Most of it's done. You're at support, so no. You could have shorted it up there at 1432, but I wouldn't short it today right now. You're into support. It doesn't mean this will end up holding as support. It just means that it is support. It is support. It is. There's no subjectivity about that. That is going to be support until you close the daily candle under it. So you're trading, support is $13.18. You're trading at $13.31. So if your trade is looking for, 15 cents, then yeah, I don't see why you can't do that. But I know you're not looking for 13 cents. I know you're looking for 0. So yeah, I mean, you got to change the way you're thinking, my friend. You think that because this thing is dropping and because you think that it's going to 0, you think you should just throw a short on. No, you shouldn't. If you do want to short it at resistance, not support. All right? Please be a seller up here. You're always a buyer under price. Under price is buyers. Above price is sellers. You want to sell with the sellers. You don't want to buy, or you don't want to sell with the buyers ever. You want to sell with the sellers. So watch resistance 1429. You just got to be patient, right? You got to wait till price gets back up there. You could have shorted it yesterday or today. I'll bet you anything against a nickel. I'll bet you $100 bill against a nickel that there was a short opportunity to take today at daily resistance. Would you look at that? So here is the daily open right there. That happened at 7 p.m. Eastern Standard Time yesterday. You could have just waited for this candle to happen, which puts you under the daily open, and you could have said short with a stop above the high of day. And in hindsight, it worked, right? That's where you would have been taking a short. And why would you have sold there? Because this white line is daily resistance. All right? So taking a short down here into support, no. You should have shorted it up here. And you had all the way until the London session to do that. In fact, you could have done it at 7 o'clock in the morning, because that's what time this candle opened. So at 7 o'clock, 3 hours ago, you could have taken a short right there at 1420. But you can't take a short now. All right? This was the expansion already. It's already happened. You're chasing price. Never do you want to be a chaser of price. If you are going to be a trader, you are going to have to anticipate the direction you think the market is going to go, but we use high probable areas to do that, right? So, no, you can't short Solana right now. But no matter what price it is, no matter what price Solana is, you can still make 99% by shorting it. That's the good news, right? If it's at 1 penny, you can still make 99% if it goes to 0. You can only ever make 99% on a short. So, I mean, that's the maximum target or maximum profit potential on a short trade. And if you're using leverage, then whatever leverage you're using, you can do the math to see what your short potential is. But with spot, only 99%. 99.999999, right? Infinity. Good morning, everybody. Good morning. Good morning. As long SPY now. No, not yet, Brian. You got to be patient because, like I said, you got a ton of momentum coming into that level. You're currently trading under that level. We got to wait for the momentum to wane. We got to wait for the marketplace to basically reverse. We're not waiting for the reversal. We're waiting for the order flow to reverse. We want the order flow to switch from being bearish to bullish, and that can take 2-3 days to play out. Can you see V-shaped recoveries? You can. Do they happen often? No, right? No, they don't. They don't happen that often. Usually you will get multiple chances to get into a long position. So I want to make sure that buyers are indeed stepping up here, because if they're not, then it's going to continue to go lower. So by just pulling out the volume profile, you can see that there is a lot of shit happening right now at this level. In fact, your point of control is there at 39.67. You can see these volume nodes down here building. They are getting bigger. So this is profit taking. These are people taking profits. Next, you need to see buyers start stepping up. So if today closes with the point of control being down here, then that would look great for getting long tomorrow. Like I said, Friday, we'll wait to see if we get a retest of this price. If we do, then we can look for those long entries. If you want to buy it now, make sure you put your stop well under this low, because if there is a liquidity run under today's low, it will take you out with it. All right, it'll take you out with it. So it'll be up to you to justify or put where you think that stop should be if you're looking for a longer term buying opportunity on it. All right. Good morning, good mornings, good mornings. I remember you said the SPX pullback to 39.12 would be good for an entry to the upside. Is that still valid? Yes, it is. That's what we've just been talking about. We got to wait to see if buyers are here. If buyers aren't here, there's no point in us taking the trade. If buyers are here, then we can take the trade. See, price, the way price works is this was the trade on the day's range for all day traders, right? I'm not talking about long traders, like swing traders and position traders. This does not apply to them. I am a day trader. Everybody that listens to me has aspirations of potentially being a day trader. But for the day trade itself, the short is over with. The short happened earlier on in the daily range, right there at what? The London session. That's when the short trade happened. Right there, London session set the high of day. And then you got straight expansion to the downside. If this was the trade, this has already happened, or on Tuesday when we were looking for the short up there at 402, right? That day, you would still be in this with the continuation. But I do expect there to be a lot of profit taking here. So I do expect that you will get some kind of a bounce at least. But what I have to position myself for, or what I have to wait for, is that potential run below the low, then back above the level. Then we could get long and you could put your stop under that low. I don't know that low will happen. It doesn't have to, right? Nothing works every time in trading. But yeah, I do believe that it is a place where we could potentially change that short side bias, start looking for upside swing. It spent quite a bit of days up here. I don't typically like that. Because, I mean, you have a perfect 3-drive topping formation staring you in the face, right? Higher high, insignificant high, another insignificant high, then price drops, setting in this high, and then today's a lower high. You can literally see the rotation of the market right through there, right? So now we want to see a rotation of the market here, right? Okay, good. All right, so we need to wait for buyers to step up here before we can get long. If you were, like I said, you just want to buy longer dated calls 15, 20 days from now, then you're just risking that premium. I don't have a problem with that. Just make sure it's not your entire account. All right? Just make sure it's a small percentage of your account. Right now on the percent gainers, you got ABOS leading the pack. Let's just pull up the hot list. No, you don't. None of those even look like this. So that two different two different scanners are pulling up two different things. But here's all your change percent gainers on the day. SATX. Maybe I can do it like this. No, it won't let me. Yeah, I don't even see AT&T or AT&T on the other. It's not AT&T, sorry. AT&T is just T. But a lot of stuff on the percent gainers. Here's your volume winners on the day. AMD is that leading. Let's go check out AMD, see what we got going on here. Let me get rid of this. All right, so did AMD pull down into this right there? Is that where it's finding support? Yes. Awesome. Yeah, I mean, you did that pre-market. AMD's up on the day. Big. Nice bounce. You haven't got that bounce like that on the S&P 500 yet, but if a lot of stocks did that, then yeah, it's going to look more and more like a buy there. For sure. For sure. What's Tesla doing? Excuse me. Nothing. Currently trying to find support. We did liquidate that swing low, so as far as I'm concerned, Tesla doesn't need to go any lower. Both of those swing lows were liquidated. So your next liquidation point on Tesla would be down there. So Tesla could be a buy right now. Let's pull up the option on Tesla. We'd be looking for roughly 182. If we were expecting that to hold for a while, we would want to at least go out a month. The option premium is still so expensive on this thing, even though it's I mean, it's literally so 182 strike. You can't do 182 strike calls this far out. You got to be $3 wide. So let's go 2 weeks out. Still rather expensive. $8. So you're going to need, $800 to play this to be a small portion of your portfolio. It's just a high, it's a high beta stock. That's why it's still so expensive on the premium side. So it'd be like you would want to buy 182 calls, and those 182.50s are as close as you can get. They're already in the money, and they're $10 a piece. And 82.50 is there. Right there, 82.50. So that swing low, anything underneath that swing low would bring that 82.50 strike call out of the money. It'll make it a little bit cheaper, but not much. You can see there, it just went from $10 on the bid or on the ask, which is the price you will pay. But that's about where I would want to see it hold if it's going to. So what you can do is you can wait, see how this hour closes. You would hope, you would want the hourly to close above that. This is that price, so you can see how the liquidation happened. Took multiple hours and then boom, shakalaka. Up out of there. This is your bounce. You're coming back in for a retest. So maybe wait on 179.83, because if price drops back under 179.83, then it's not going to be looking like a liquidity break. It's going to be looking like downside continuation, which you could go lower, but as far as, as far as liquidations are concerned, there's no point whatsoever for Tesla to trade under 179. Because like I said, it's got to go all the way to 130 to make the next liquidation. Well, at least for the next monthly low. There's probably weekly lows in there. There's a weekly low here. So one could argue that if you stay trading under 182, then this would be the next downside target. And then even on a weekly time frame, you got to go much lower to get to that one. So we'll see what the market's looking for here. Maybe the buy on Tesla ain't right now. Maybe it's, next week. And maybe it ain't, right? If it's continuously pushing, then it probably ain't. Because with this kind of price action right now, it does look to me, at the very least, it's going right back down to that low. It doesn't mean it has to do that. It's just what it looks like. So it could find support there, but I would want to see. So if you want to do it today, then you would be watching intraday support that is currently formed and holding 183.40 or 183.12. You see how it traded under that? And now you're getting a bounce. So if I was going to trade this, it would be cheaper just to buy the underlying asset. All right? If you have a small account, if you got under $1,000, you could just buy, 5 shares of the underlying asset. Is it going to make a lot of money if it goes up? No. But if you have a small account, $50, if you made $50, that's well over 1%. Coming in and testing that intraday support again right now. Yeah, let's see here. Yeah, nice big bounce there. That's over $1 just on that 5-minute bounce. Hey, I think your lows are probably pretty close to being in there on Tesla. Yeah, that'd be nice. So if you close an hourly under 183.12, then I'll be wrong for the intraday, and then this will be the next place to look, 179.83. I know a lot of people love Tesla. Hi, Johan. I agree, Basari. I don't know what you're talking about. I didn't see Basari's comment. Oh. That trade you closed probably just played out because Russian missile thing. It's possible. Or it played out because that's what I was expecting it to do. Whatever news helped it, I don't really care. The analysis was straight, right? That's all that matters. That's what you're trying to do. You're trying to see the marketplace the way that I see it, right? So that way you can take trades regardless of what plays out. Because that trade's getting ready to get stopped out. Bitcoin's back, right back to that entry. Look at that. It just got stopped out because I had that stop under my entry. I mean, there it is. Right here was my entry. I took the entry on this. So, yeah, that trade just got closed out. See, that's why we take profits and move our stops, ladies and gentlemen, because we don't see into the future. There's no way to know if this is going to happen or not. Is it possible that it just ran up there, stops me out, and then rolls back over? It is. I mean, resistance is here until you close above it. That's resistance until you close above it. Is that likely going to play out? I doubt it, because you didn't take out even today's low. Oh, that's yesterday's low. Sorry. You did take out today's low. This was today's low. But you didn't take out yesterday's low. It doesn't matter. You're bouncing. So that buy on SPY is probably looking pretty impressive right about now. No, not really. But it is definitely a place that we were looking for, right? So at least, at the very least, we know where to look for the entries, and that's what you are trying to do. That's what you want to be able to do, to know, well, where it is right now, I don't want to take a trade. Where it is now, I do, right? If you can do that, just that much right there will increase your winning percentage. Regardless of what news comes out, whatever drives price, you already analyzed it. You already made your money. There's nothing that Bitcoin can go all the way back up to 50 G's today. It will never be able to stop me from making that $650 I've already booked as profit. That's mine. It's done. It's over. It's already mine. It can never get it back unless I give it back. So it can go up. We do have a bullish bias on risk. We just have to be cautious with Bitcoin because other exchanges are starting to fall, right? Well, I don't know about exchanges, but other crypto companies. So if they own money, if they own a lot of Bitcoin reserves, if they start liquidating Bitcoin to either escape with as much money as possible or whatever, for whatever reason, then Bitcoin's price will continue to go lower. But I do expect that risk on correlation to come back into Bitcoin. This is your high of day. Right there. This is your open. Right there. You're well above intraday res. That's where I took the short. So it's moving up. Buyers are coming back to this market. They will come back to Bitcoin, ladies and gentlemen. Bitcoin this is the best buying opportunity that you've had on Bitcoin since here, right? Since here. So since Monday, the 16th of November, 2020, this is the best, cheapest place you can buy Bitcoin since then. Buyers will step up. You do not, like, if you're waiting for a capitulation wick, like, you're probably going to miss it. Like, is that a capitulation wick? No, not really. That's why everybody thought that the lows weren't in. But now they're waiting on that. If you wait on that, you're probably going to miss it. Buyers will be in this thing way before the price leaves the area, right? Because once it finds a sufficient enough demand, then it turns around and goes in search for supply. So that demand will already be there. It'll already be in the market. It'll already be there, already in the market. Other people will have bought some. A lot of people have bought the lows. We know this based on just the trend score indicator on Glassnode. We know that people are buying it. I mean, for the last 6 days, 4 out of the 6 days were ones. And that's the highest. That's the highest recorded. Let me log into it here. I'll pull it over. All right. Like I said, cell phone is the Wi-Fi hotspot today, so it's a bit slow. I am powering a big unit here. All right, so we want the trend score. It doesn't always mean that price is going to go higher either, just because people are buying it or accumulating it. But I mean, 1/3, like I was doing some reading today, just random reading, and over 1/3 of all the Bitcoins mined are owned. They're already owned. Well over. Like, and exchanges and stuff like that own a majority of the Bitcoin. Then you have just your investors, and come on. Jesus. This is pathetic. Thank you. How about giving me the one I want? Thank you. Yeah, so you can see there, right there, lots of it going on. All right, so since you made that fresh 2022 low, 1, 2, 3, 4, 5, 6, 7, 8 days. And out of those 8 days, you have 1, 2, 3, 4, 5, 6. 6 of those 8 days are ones. 1 is the highest accumulation score that you can get. So out of the 8 days, 6 of them are complete and total trend scores of 1. That is, yeah, a lot of buying going on. Did we see where? Yeah, another thing that I just noticed on SPY, because as I was talking to you about Glassnode, I'm over here looking. Look at this. That is the bottom end of the expected range for that the options market priced in this week. So not only was that a very important technical price level being October's high, it's also the level that we were talking about being, waiting to see for the pullback to get to before we decided to be a buyer. It also corresponds with the options market priced in expected move for this week. If I'd have seen that earlier, then I probably would have told Brian that he could be a buyer, or at the very least a seller of puts under 386, right? Because that's also an option strategy. That's actually the best option strategy. Selling options is the best option strategy, but not everybody can do it because it requires a much larger account, because you got to have a lot of margin to sell premium, but to be a buyer of premium, you don't need any. The problem with being a buyer of premium is that 90% of options expire worthless. So if you don't buy the right strike at the right time, then you're going to lose your entire investment. So, 390 calls wasn't a bad idea. But you want to go out further than 12 days. You want to go out at least 3 weeks, in my opinion. So that way the time decay on the options premium doesn't do really bad. You'd be looking for the call, and look how much inverted the price is over here for calls than puts. See how the 2 strikes out of the money on puts is $6.40, $6.80. Over here, 2 strikes out of calls, $7.96, $7.42. Sorry, this is the ask. $6.50, $6.99. $8, $7.46. Almost a $2 difference there in some cases. Definitely over $1 higher. So that little bit right there, that skew just says that more calls are being reacted with right now than puts. I wonder if that's the case on today's expiry. Yeah, it is. It's actually cheaper on calls. Never mind. 2 strikes out of the money on puts. But these are going to expire today. So I wouldn't dare buy these. No way. No way. At least 2 weeks. 3 weeks, 2 weeks, 3 weeks out. If you plan on closing it in a few days. All right. Because time decay will extrapolate that value out of that premium, whether price is going in your direction or not. If you just get a little bit of sideways price action, the substantial amount of premium decay will come from that time. Or premium, yeah, it'll decay because of time decay. That's an actual function of the way options are priced. But let's go back to the chart. We know Bitcoin's bouncing. Overall, the week that it's had has been very mute. Very mute. Same goes for the spot. Very muted week in direction. Very muted compared to last week. Yeah, that's exactly where it's finding support. So, see if you come back to the open. I doubt you will. If you do, it won't look good either. Trying to figure out an area here where we could potentially be a buyer. Don't like that. There really ain't nothing. Maybe there, 391.26. If you close a 15-minute candle under that, then watch the hourly or the daily open, which is 390.46. 390.46, that's your daily open. Not really a whole lot here on the 5-minute. So if I was going to be a buyer because I expect today to be bullish, I would not want to see a 5-minute closure under 390.88. The 5-day expirations are cheap, but that's not even going to take you up into next Friday. What is next Friday? Let's see what the option prices are for that. That's going to be the 25th. November 25th, right there. 8 days out. Yeah, they're $500. They're $5. $4.60. 414 on the put side. So not the skew's not real bad. Someone owns 42,000 of these things. Let's see if there's a lot of stuff going on at time and sales. Probably a lot of big positions being taken today. It's very active in SPY. The time and sells on the option chain, very active. The biggest ones are at 958. There was a 25,000. Someone either bought or sold 25,000 contracts for the December 16th expiration. It's 355 puts. So in my opinion, someone is selling those 355s, 25,000 of them. Jesus, that's a long way away. They're not buying 355 puts, not 25,000 of them. That's a lot of premium. $1.77 is the premium. Should be more than that. It should be way more than that. Let's go see. So I'll show you what I'm looking at here. I don't let that affect my bias at all, right? It's not good to let this affect your bias at all. I'm talking about this guy right here. As of right now, it's still the biggest one on the day. That's why it's still up top like that. At 9:58, this trade came in. 25,000 contracts on the Amex. It's got 28% implied volatility. So what we want to do is go look for December 16th. $390.47. Doesn't 355s. So December 16th. December 16th, 355s on the puts. Right here. Yeah. So there's no way that they're buying those 25,000. They're selling those puts. That's way out of the money. So like it looks to me like whoever's taking that position is expecting the market's bear market low to be in. Because if you look at this, right, 355s is down here. So right in here is 355. They think the market's going to stay up here by December 16th, or at the very least stay above 355 by December 16th. That's a month away. Look at that. That's like a 90. Sorry. That's like that trade has like a 90% chance of winning. If I pulled it up on the, yeah, I'm not going to do that. It takes time, but I bet that's what they're doing. 90% chance of playing out. That's only a month away. How long did it take for the price to get there? On this, we use this day here because that's the last time. So on today, that's 25 days. It took 25 days to get there. So they're counting on about the same amount of time to stay above 355. 358's above 355. You know what I mean? And at any point they can close that position. Like if price gets close, then they just won't receive all the premium, right? that would get deducted. Whatever's left out of the premium it'll get deducted out of the P&L. But that's a nice trade. That's a nice trade. So yeah, some people at least are assuming the lows are in. That's what I'm trying to say. And I guarantee the guy that bought here, the 365, he's assuming the lows are in as well. All right. Heath on Bitget, when it shows your unrealized P&L, is that after your leverage fees or before? That's what I bring home. That's what I brought home. That's the money that I made on the trade. That's what you realize. The fees and everything else comes out of it when you do that, right? When you close that position, that's what you realize. So that's your gains. That means minus the fees, minus everything. You're with missiles. Wow. I don't know what that means. How a YouTuber get missiles? I don't know what that means either. That trade you closed probably just played out because got you. That's why he's saying that. What's the Eastern Standard Time for the London Open? 2 and 3 o'clock. I think 2 o'clock in the morning is the London Open, but usually these opens last for a couple hours because the majority of the volume comes in at the open and a little after. It can take a couple hours for the directional swing to take place. But for me, it's 2 a.m., 2 and 3 o'clock. 3 o'clock is usually the time you'll see, like most of the time, 2 or 3 o'clock will be the top or low. The high or low of day, right? How you get that bell sound at market open, that's think or swim. 3 markets, please. 3 internets, please. That bell is it's the think or swim platform. It does that at the market close too. Hulk Hogan versus The Rock, both in their prime. Who wins an arm wrestling match? Man, you gotta go with Hulk, all right? I have to go with Hulk Hogan. Both in their prime. I mean, The Rock was strong too, but I mean, they're both very big and strong guys. I don't know. Because isn't arm wrestling, doesn't that have something to do with a little bit of knowledge? Like some people are just better arm wrestlers than other people are strong. So maybe, I don't know, you just think the Hulk because all the time he ripped his shirt off. Hulkamania, brother. Yeah, the Hulk. Any case, oh wait, sorry, let me skip. I skipped one. GoFundMe has been started to collect funds for the great cause. Inflation is high, and Heath needs a new internet. Please donate. No, Mr. Ray, that's not. No, do not do that. It's not a money issue. My internet has nothing to do with money. I've thrown so much money at getting better internet. It's the location. That's it. Right? It's the location. And I've already made up my mind that I'm not going to move just to find new internet or better internet. Verizon is laying fiber in this area. I just don't know when it comes online, but I have been assured by Verizon that they will, in fact, let me know the day that I can buy it. So we're just kind of waiting on that. I already tried the satellite thing with Elon's company. It did not work out. They ended up getting $800 from me and giving me back $200. It's not an issue with money. I have plenty of money. I can't buy the internet. I have the highest internet that I can buy with AT&T for my home internet. It's the most expensive plan that my location offers. I own that. Plus, I have cell phones, multiple cell phones. Both of those can be used as mobile hotspots, as well as a Verizon mobile hotspot unit that I'm paying $100 a month for there. I'm probably spending right now about $275 a month for internet. And it sucks. It's like shit. Terrible. It's not a money issue. It's a lack of availability for actual ISPs in this area, right? Just across the street, people can get Comcast. I can't. Oh, the only provider that I have is AT&T or cell phone companies. And right now, I mean, with what I get with AT&T, 4G internet from a cell phone tower beats it, but you got to be within, a mile of the cell phone tower. I'm about 4 miles from it. It's just my location is a very bad location for internet. And I just found that out when I started to do YouTube. Before YouTube, the internet was never an issue. Never. All right. It's the upload speed in particular. You got to have high upload speeds in order to maintain the stream. So please, I don't want people donating money thinking that I'm too broke to afford internet. That's not the issue at all. Please do not donate money for internet. Because even if you do donate it, I'm just going to have to let it sit in the account until Verizon comes available anyways. So, no, I will, as soon as I can get it, my friend, I will have it. I have made all the necessary arrangements. Heath, any case change, we can look at BTC gaps and higher time frames. What do you think about spot buying plan exchange problem? Really annoying. Yeah, we can go look at CME. There are a couple gaps. We got a gap up here that I expect will get filled probably in the next bull market cycle. I don't expect this cycle to fill those gaps up there, right? And the only other gap on the CME chart is the one under $9,000, right? And it's only a $115 wide gap. It's not a very wide gap. So basically, one day I made the assumption that the gap was filled specifically due to the spread. All right? Because since it's only a $115 wide gap, I said that the CME market probably said that the gap was filled because the spot price of Bitcoin, the spread will get above $115 all the time. Now the spread on CME is $25. So according to the CME spreads, this gap has not been filled. And it's right here. This is the gap. This is the gap that everybody's talking about. Right there. So this little gap in price, 98.50 to 97.35. That is a $115 gap. 115. But the spot price of Bitcoin will have filled that gap. All right? That's all I'm saying. So when price traded to here and stopped, instead of filling the gap, right, the spot price did fill that gap. Well, we can go look at it. That's why I don't even consider that gap. I consider that gap as filled. And the market did too, because if it wasn't, I seem to think, that it would have, right? It would have. But that's just my opinion. There's nothing really that I can do to prove that that's the case. But we can play around with the charts. I mean, that's what we do anyways, right? We are technical analysts. So let's technically analyze this. All right. There's that wick right there. I mean, all of this stuff too in here. Tons of trading happened in that gap, guys. Tons of trading. Those gaps are usually better when price has never been there before. Like that was the whole reason I had a $26,000 target, was my bear market target back way when price was up in around $49,000. I had a bear market target of 26K based on an unfilled gap. Because price literally never traded there ever before. So it was new trading. But we got to go to the daily here. Let's go over here and look at this gap. So like all of this right here, this day opened there, this day opened here, right here. So if I just do this right here, see this close, this bullish closing day? If I just do that, right? Just by doing that alone. Because remember, these closes that is resistance. That is an objective resistance level that the market decided, not me. I didn't decide that to be resistance. The market did, because that's where it closed. That's the price it closed at on that day, right? So on your first attempt, you broke back above it. You didn't test it through here. It was here. That Bitcoin just on the spot chart just blasted right through. Friday, July 24th. So that means on a Saturday, you blasted right through it. Saturday, right there. So this high is 9,735. We want Friday. There. That's what we want right there. So on Saturday, and then this is the resistance on spot, the same candle that I marked resistance here. All right? That's Wednesday the 10th. Wednesday the 10th. What's this price? $99.35. This price, $98.94. So where people say the gap is from this open to this open. That's your gap. So in their eyes, it's much wider than it really is. It really isn't that wide. It really isn't a gap, because this price closed here on that day. So yeah, even though here on this day you gapped because this was the weekend, you really didn't gap, because there are orders that had traded in there. All right. So that's where the market decided to stop. That's really your gap from here to here. But according to the resistance level that the market made, this is the highest daily close closest to this. You have another one there that's even higher that you could mark. So there are tons of orders that took place in this price from 97.35 to 98.50. All this entire day right here, chewed right through them. All those orders. This day, this red day. Because you opened here, you traded up, then you traded all the way down. So technically this gap isn't really even a gap. But if you, just by looking at those two lines there, you can see how that acted as resistance and turned into support. The market traded right back down to it. And this right here is going to be your high June close. So this is the high close through the month of June, because this is all July. So there's your high month close in June. Look how price traded right to it. High month close, high month close, high month close. That's where buyers stepped up. Right there. So, I mean, if you want to say that that gap is unfilled, be my guest. If you want to aim for that, be my guest. If you think price is going there, be my guest. I honestly don't think that gap will ever be filled. In my opinion, I think it has been, already is filled. But there are some gaps here, 2 of them, that are not filled. Except, that price had already traded in there. So let me show you the difference between these 2 gaps. Why, technically one could argue that price traded in there here. See these candles? You opened and closed inside of that gap. Right, there's the gap, there's the gap. So price traded in that gap here and then here. So that gap, price has already traded in. The reason why I had this target over here, let me use this box, is simple. Price never, ever traded in it. All right. This one was another gap, but over here, price traded inside that gap with multiple opens and multiple closes. All right. This gap, however, from that swing high to that day's low, this day's low to this day's high, price never traded there. So on the CME, there was never any orders filled in between that high and that low. So that was my bear market target. Let me just get it close. It don't have to be perfect. Shit. Yeah, I screwed it all up. There. So, and it was underneath all of this stuff. Look at this. Right in that gap. That never had been, price had never traded in there before. And look what a reaction you got by getting in there. So naturally there was new orders in there. But then we blasted through it here. Came back up, and what did it do? Look at my cursor, my line. Let's get rid of the red line. Well, let's put a white line in there like this. Watch. Here, boom. Now we can get rid of the gap box, right? There. Look there. See? So that's why that one was so important to me. I mean, you don't get any more perfect than that. People that the market is very efficient. I'm talking very efficient. That's a short trade for sure. Watching CMEs, midpoint, this breakdown candle. This was an unfilled gap that had never had price traded in it before. You got this swing low. That was the market low. That was the low of 2022 for a long time until this day here. So big swing low right there. It's Thursday, May the 12th low. That's May's low there. 2022. In August, you traded right to, and I mean to, the exact price and rolled over. So that gap is filled. Dunzos. So, I mean, you can't really look at price like this, right? I mean, you have to because it's there, but just understand that all these prices from, all the way up to here, that's like a ladder. Like if you look at the order books, you can see it better. Is there an edge by watching that stuff? Not really, but you can see in the order book, right? A transaction took place at that price. And since that occurred, you did get that transaction, therefore the gap is gone. It's those prices where, it never traded. But like I said, one can argue the spot market did trade through that because the spot market doesn't have gaps. Gaps, the only reason that these gaps exist, and it's not just one straight candle moving all the way down there, it's because this market closes to resettlement, right? Like we have perpetual swap contracts in the crypto world on like these exchanges, like Bitget, for instance, they have perpetual futures contracts. That means there is no settlement period. It is, but it's continuous, right? Like every 8 hours, futures settle on in the crypto world. So it's perpetual, it never stops. CME is not a perpetual swap contract. CME closes just like the DXY does, just like the ES minis do. That's because for an hour, twice a day, the CME closes. Every day, twice a day, the CME closes for cash settlement. And then on the weekend, it's just closed. So that's the only reason. But spot price never closes, ever, for nothing. It continuously runs forever. So, I mean, there have been orders there, maybe not on the Chicago Mercantile Exchange, but there were orders placed there on the spot market. So the spot market itself decided, where to go based on those orders. So it's, it's difficult. And there's a million different YouTubers out there. There's a million different strategies out there. But to me, like all you need to do to be successful in trading is you need to have very good risk management skills, very sound risk management skills. You got to be patient. You can't chase price. You can't do all the things that retail traders do in the beginning. So that's where you have to work on yourself in order to break all those rules, to stop doing all that stuff. Once you have that and you understand just basic technical analysis, the analysis that I try to teach people, the analysis that actually works consistently over and over and over again, that analysis, you understand that stuff, you will be better at trading than you are right now. It's a guaranteed fact. You just need to know, what do I need to understand about trading in order to make it successful? Once you understand those concepts, then it's about risk management. Then it's about being consistent in the way that you place orders. Be consistent in the way that you manage risk. Be consistent in all of everything. Because in the words consistently profitable, the most important part of that phrase is the word consistent. If you are not consistent in anything in your trading, you will never reach profitability. You must reach consistency first. When you are consistent, then you have consistent data to look at. And over time, you can make adjustments here and there. But when you make those adjustments, you must be consistent in the future with your adjustments. So then you can start to really see things change in your trading. You'll be like, wow, look at this. Last week, I took 3 trades. Last week, I was 3 for 3. Yes, stuff is starting to click. So why would you want to do that if you have that week where you're 3 for 3? Why would you take the next week, take 70 trades in the next week? Or if you were 3 for 3, say, using my strategy, why would you then go trade a cup and handle, a head and shoulders, or a banana peel zipper slick? Why would you trade that strategy, right? That's where retail screws up. Retail is trying to get the best from every YouTuber they can find and every book they can read and every bit of information that they can find on the marketplace, Meanwhile, none of that is helping them reach consistency or profitability. You got to be consistent first. Once you're consistent, you will find that profitability. It will happen. It's just a matter of time. Once you fully grasp that scenario, that it's a system. Like, most guys don't even take physical trades anymore. Like, I'm in the dark ages of trading because I physically place my orders manually and I manage my trades manually. People have algos and bots do it now. So they're traders. They just don't have, all they do is fire up their computer and they leave. It's over. Their trading is done for the day. Their algorithms, their bots take care of their managing orders and this and that. And if it's that easy for them to do and generate consistent returns, then why can't the average retail investor make money? Why can't they just buy that bot? Right? Well, in first place, you got to have a good programmer. Secondly, is the bot even consistently profitable? Does it make money over time? Does it have a guaranteed track record? Or are they lying to you? Like, these are all things that, to me, you don't need to pay for anything. You do not need to pay to learn how to trade. You can do it yourself. You just got to believe in yourself. You got to understand it's going to take a lot of hard work, a lot of dedication on your part. If you truly want to get this, if you just want to be a follower of signals, you will never, ever reach profitability. Ever. Because those signal services don't work. They shift their winners. They just shift their clients around. They'll have 4 parts. Boom, boom, boom. They split you all up in 4 parts. They feed one part this trade. They feed this part this trade. Then they just keep rotating clientele throughout that. Boom, 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 boom. So that way you may get on a run where you get a few winning trades, but those guys aren't even actually making winning trades. They're giving 2 trades. One losing, one winning, and in some cases, both of them lose or both of them win, because that's just how the market works. But you're never going to reach anything that can be calculated or even considered consistent. And that's the thing that everybody's missing. That's it. That's the answer. That's the secret. That's the holy grail to trading. Consistency. That's it. If you want to be a head and shoulders trader, you only trade head and shoulders breakdowns, or you only trade inverse head and shoulder breakouts. Because if you do anything else, your data is now inconsistent. Consistency, that is the key. When you can reach that, profits will come. That's what I had to do, right? But my problem was I was trying too many different things. I was watching moving averages. I was watching patterns. I was doing all that stuff. And then I started to understand, like, I need to keep 75 notebooks or journals, if you will, just to keep track of my trading. And that to me seems like a lot of work. So I just broke it down, figured out how does price even move, and simplified it all. Because usually simple is better most of the time in most professions and most everything. Simple is better. The problem is people think simple don't work, or they just can't believe it. Even though that I can come out here and show consistently, boom, boom, boom. And not just, really good trades, the best trades. You're not going to find anybody on YouTube or Twitter that takes better entries than me on a consistent day over day over day, period, right? Nobody. Every now and then they might get lucky and squeak one extra pip out of a trade than I did, but you're not going to find someone that has better entries than me. How am I able to do that? It's because I do the same thing over and over and over again. I do not change. Change is good in some things, not in trading. Not in trading. If you find an edge, you do that edge until that edge is no longer doable, or until the marketplace prices that edge out. And this edge that I'm using hasn't been priced out of the market since 1960. It's still there. So my edge, it doesn't appear the market will ever price it out. Ever. It's simple. Simple dimple. So yeah, just do that. Get consistent. Find your entries. Find your exits. If you're going to be a day trader, then you're looking for entries inside of each one of these days. You already know how a day works, how the algorithm that makes price move, you already know what it does, how it moves it, what it does, what it's looking for. All right? There's people that's been trading for 30 years, 20 years, and they'll be the one, they'll tell you that there is no edge in day trading. There isn't. Intraday price action is just random noise. There is no way you can get consistent trading it, but yet I do it on a daily basis. It's just they don't understand, or they don't want to understand, or they just couldn't do it themselves. So therefore nobody else can. Just reach consistency. The easiest thing I can tell you is just watch the current daily low, the current daily high, and the current daily open. If you watch just those 3 data points moving on, as you learn, you will start to see that the market repeats these things every single day. You get an open, then the market makes a high, then it goes down, then it sets a low, and then occasionally you're going to have sideways choppy days where it just consistently takes out the high and the low, makes a new high, and then a new low, right? So if you're in a series a day like that, just learn how to identify it and then wait for the market to make a new low and then take your long. You're still taking the same trade on the same principle, right? And on trending days, you're looking to catch the meat of the move. You're looking for the day to be a trending day, so therefore you're aiming at the previous day's high or the previous day's low. That's the direction you're expecting the trend. And then you have outside days that make a fresh daily high, taking out the previous day's high, and takes out the previous day's low. That's it. That's all the market does. There's no other kind of candlestick. There's just those 3. Outside day, inside day, trending day. No other kind. There's nothing else. That is it. Learn that. And then you'll start to be able to, kind of get an idea where you think the market may be going for that day. Here, look at this sequence right through here. So I had members asking me if they thought that buying the daily low would be a good idea, like a liquidation break. Remember, I said that liquidation break strategy is best used during high-risk news events, not during normal days of trading. Because if you're in a trending day, then you're going to make a daily low, then a new daily low, then a new daily low, then a new daily low. So you will literally lose trade after trade after trade after trade trying to find the freaking low. When if you just realize that usually trending candles are the most popular. Inside days, outside days are not as popular as trending days. So look at a daily time frame right here, right? You made a high, you took out all this stuff over here, so it did look like it was going to go higher, right? So you would have probably been looking to buy, demand, but you would have been stopped out there for sure. But it still would have been a good trade to take nonetheless. Why? Well, it found support there on that day. So why do you think it wouldn't then? There's no way to know what's going to happen, but price is trending up. There's the breakout. You get long there, you throw your stop, you get stopped out. You live to fight another day. The very next day, what happens? Price opens and drops. Boom. Right? So that tells you you're trending to the downside. Each one of these days made a lower low. Here's your low. There's a lower low. There's a lower low. There's a lower low. So now in here, you see prices chopping around, But not every one of these days are an inside day. For instance, they're all inside of this day because this day's so big, but just day after day, right? Day after day, right? This is an inside day for this day. This day inside that day. This day broke out right here because it took out this day's low and that day's low. So at least this day trended. It broke out to the downside. Then you got a new low up. You took out the high right there. You closed bullish. So now we're probably going to be looking for entries right around in here, which I told people to look for bullish entries here. Right there. Boom. Look at that. There it is. Why did I tell people to look for bullish entries here? Did I know that price was going to trade down to there and reverse? No. I just know that the market respects these ranges. This is the support that the market said was support. That's it. The market closed there. Therefore, until you get a daily close under 15,891, this is going to be support. You want to be a buyer here, whether you're a short seller or not. If you're a short seller, you're still going to be a buyer there because you're going to be taking profits to buy that back, to get out of your short position. No matter what, this is where buyers are, not sellers. So, boom, you trade right into that level. You took out this low, that low, that low, this low. Well, you didn't take out this low, but market might reverse from here and start to look for what? That high right there. Boom. So now this is the area that market has to get above before you can say you're trending, right? You got to get above this or this to say that you're trending lower. So there's a big hole right through here, right? There are no candle bodies between these two lines outside of these two. Okay? There are no candle bodies outside of this line besides these back here. But we don't care about anything beyond us. We don't care about anything back here. None of this back here matters anymore. This is all set in stone. This happened on this day, and it will never unhappen. And we can't look for this happened on this day to happen over here either, right? You've got new data here. There's no candle bodies in here. There's no candle bodies out here. So when we start to get candle bodies outside of these two lines, then we will know that the market is trending and we'll be able to look for entries in that direction. Same goes for down here. We close a candle down here, then we know that there's a good chance it's coming here. The candle bodies tell you the direction, but traps do exist because it happened here. You broke out, you did again, but then boom, drop. This was the range. Here. No candle bodies outside of this, no candle bodies outside of this until this happened here. So one had to speculate that price was probably going to go lower, notwithstanding that this is a trap, because traps exist. Was it a trap? It was. Boom. On the intraday, this provided a beautiful, flawless long entry. Flawless long entry based off of old support. Beautiful. But these candlesticks, they will help you get your directional bias just by understanding simple support and resistance. It does exist, because if it didn't exist, if support and resistance didn't exist, there would be candle bodies down here and candle bodies up there. So like when people look at these crazy Heiken-Ashi craps and Rinkos and stuff, I can't get an edge from that. Can't. It's not there. You've literally shot yourself in the foot. You're trying to determine what direction you think the market may go. You don't know what it's going to do. You're just trying to take an entry at a high probable area so that way you can maximize your hit rate. That's why you're waiting for these high probable areas, because you know over time they are respected, even in sideways choppy markets. Look here. I mean, you can do this over and over and over again. Right there. For how long? Was there a candle body close under this white line? Nope, not till there. What about on the upside? Was there a candle body close above? Nope, not till there. So what would you have been looking to do here on this day? Because what did the market tell you? You know that this is resistance. You know that that is support. There's your close under support. Then your next day is damn near a bullish engulfing. Then the next day closes higher than that day. Then this day comes down, touches old support. Notice how it didn't touch this support. Didn't touch it. Nope. It touched the old support. Remember, if it is a trap, then you revert back to the old support. Here you go. Boom. You could have bought that and made a killing that day. Then the next day. This isn't just on hindsight. This is the way I trade. Here it is. What are you going to be looking to do on this day here? What has the market told you? Well, it tried to break out to the downside, ended up being a trap, and we just did break out to the upside. I think I want to look for longs. Where would I do that? The high, low, open, or close. All right, so if I'm looking to buy, then I know I'm looking at either the low of this day or the or the open of this day. Those are the only two places on planet Earth and on this chart that there was a trading opportunity to be had. Nowhere else on this entire day was there a better place to take an entry than this place or this place. Since you didn't get there, it must mean this is the best place for the entry. Long. Where's your take profit? High probable area. Why? Because the market said it is. Right there. Long. This day opens, closes. You probably had your butthole puckered there for a little while because price traded right back down to your entry, damn near it. But eventually and ultimately reversing and blasting off right through your target. Not only did it take out your target, you got multiple and maximal gains off that. One entry. One. And all you did was watch a very choppy market that had everybody else confused as hell. But you took the best entry there. That was it. You even had a chance to buy it then too. It's that simple. But you just have to understand you get a high, low, open, close for every single day. If you watch, ranges and stuff and you start to understand where the operating areas are, which when I say operating areas, I mean those are the areas that traders like myself are placing orders. Those are your operating areas. There are specific times of day that you want to be looking for them too. The London Open, the New York Open. That's it. There is nothing in Asia. Screw Asia. Leave Asia alone. No, in London, New York, those two areas. Then you will be watching highly, highly important areas that the market has predetermined as important areas. I could have taken that entry right there and looked like the best trader in the world. It's the same thing. I do it day in, day out. Day in, day out. You can go back in time and look and find the absolute best entry. Right? There you traded down through it, back above it. Then you set in an intraday resistance or support. Here. Yeah, you did kind of close out of it there. A little bit, right? But these are your operating areas. This is daily. That's intraday. Boom. Look at this. Pushes right through, right into your entry. Out again. Right there. There. You got a second chance on this candle. Right here. Look, I didn't invent that line. I didn't pull that line out of my ass. I pulled it out from here. This is support. This candle right here scratches this close under. It scratches it. It's a trap. That was a trap. So you revert back to your old support right there. 1, 2, 3 chances to get long at 19,279. There is your open of the day right here. That's your open of the day. There's a low of day, potential low of day here. Hourly close under this candle scratches your long trade. Scratched it right there. Boom. Then what happened? This candle right here set this candle as a trap. Right there. You got another entry here, right? Maybe not on this line anymore, but it still worked out. Now you can watch this one. It's a trap, but still, I mean, this wick right here went to there, right to it, like perfectly. Nowhere under it. You don't need anything but candles. Nothing else but candles. Now, looking at that, where did you enter? There. You entered here, got stopped out, or you closed it. But then you seen this, a new trap. You know that on the daily you're looking for up because of this day here, big strong breakout day. You're looking for bullish trades. On this hour, what time is this? What time is this candle? This was the absolute perfect, best, flawless entry that you could have ever taken in your life. 8 o'clock a.m. Eastern Standard Time. That's the New York Open. New York Open, man. 8 o'clock. Gave you the most flawless, beautiful entry at an intraday support. It didn't look like it was going to be an entry. It looked scary. This whole candle was blue. That's bearish. But look how it closed. Look how it closed. You play with this tool. You use the principles you've learned on this channel. You will get good at trading. And then it's just a matter of time. And even if you're broke, even if you'll never have enough money to be, a successful day trader because of your funds, like you literally just don't have the money. If you can put together $500, $1,000, whatever you got, and trade that book, take those trades, do exactly what I do. If you can work out the kinks inside of yourself, over trading, revenge trading, trying to inflict your will upon the market, all those terrible things, and you can start consistently making gains and you can turn the equity curve upside down, you can take that data, 2 years worth of data, anywhere to any prop firm in the world, and they will give you money to trade. And they will give you half of the profits you generate. Think about that. Any prop firm in the world will. They don't care that it's a small amount of money. What they care about is, do you understand how to manage risk? And are you taking profitable trades over time? If both those answers are yes, they will start you out small. They will move you up because they want profitable traders. Not everybody's going to be able to do this because of self flaws, just flaws in their self. They don't have patience, never will. You know what I mean? Those type of people are not going to be able to do this. You have to be calculating. You have to think like a sniper. You can't take the shot if the guy ain't there, right? If you're a sniper, think about that. If you're a Marine Scout sniper and you want to see that pink mist, you got to wait on the guy to get there. You can wait for 5 days. You got to go to the bathroom in your pants just to get him. It's the same with price action. You can't take the trade unless the price is there. If price is there, you've already predetermined your directional bias. You take the entry. You manage your risk by putting a stop loss in. If your stop loss gets hit, you don't try to take the trade again. You wait for the next day to see how the day plays out, because tomorrow you will have more data. You'll have more information. Then you can slowly start to build in a solid understanding of directional bias. You're not going to get it in one day. It could be up today, down tomorrow. Up today, down tomorrow. You got to wait for those opportunistic times. They do reveal themselves. We do take them often. It just takes time, understanding, dedication on your part, patience, a lot of other things. And sometimes you're still going to be wrong. That's just part of it. All right? I'm going to wrap it up with that rant. You just got to understand that sometimes you're wrong. You can't force trades. You wait for your areas of entry. If you miss it, you miss it. You wait till tomorrow. If you get it, nice. If it wins, awesome. But you didn't have anything to do with it. You had nothing to do with it. You waited like a sniper for that one shot. The shot showed up. You took it. Boom. Done. Over. You did your job. Now you can pack it up and go home, wait for the next day. That's trading. It's no different. Daily, we perform these same duties over and over and over again. Trying to figure out directional bias is one of the hardest things for new traders to understand. And it still is difficult to me too, because I might read something as a trap one day because the market said it was, but then it ended up not being, right? That's what we call random market violence. There's nothing you can do for that. So a news event can come out in one day and change the whole sentiment for the market for the next week or two. When I said that we had that nice bullish print from that CPI, I thought for sure that would drive Bitcoin's price action to be bullish for the rest of November. And I'm just using that bias from the CPI numbers. The rest of November can be bullish. We don't have another Fed meeting until December. So that's when we'll have to wait for bearish sentiment to come back into the marketplace. And then FTX happens. FTX happens a day before CPI. So the FTX scandal is literally a black swan event. The marketplace has consistently traded with risk, and we have been consistently right on the risk direction. Consistently, I've been telling you guys what to look for, what I think is going to happen, and it has been happening consistently like that. So, black swan event throws Bitcoin correlation to risk out. It's gone. So right now, we're still kind of in this weird place where Bitcoin is still kind of trading on its own merit. Even if the dollar's going up, Bitcoin should be going down. Well, it kind of worked today. But then you've seen after the market opened, you had it's not a really big candle, but looking at it on the 5-minute time frame, it looked monstrous, didn't it? But if you look over here, it's really nothing in comparison to that, right? It's not a big move. But it did end up stopping me out. Today is still an inside day. It's still a choppy inside day. You're still trading inside of yesterday's range. Still. These are the days that'll kill you as a trader. So that's another reason why I say take profits. Always, always, always. Do not tell yourself not to take profits because you think it's going to do something. No, you have a rule, a system in place. That system dictates to you that you take profits. Always. You have to keep a track of your winning and losing trades. And if you leave a trade on, if I would have said, you know what, I'm going to be greedy here. I'm not going to take profits because I'm levered up and I think we're going to take out yesterday's low for sure. It's right there. I mean, shit, the high of day isn't even barely above the midpoint of yesterday. So the market has to be reaching for this. Has to. So I'm going to leave them profits on until we at least get there. I got stopped out. So if I wouldn't have taken profits on this move, which I did, I was screaming at the computer screen watching the 5-minute chart push down to it and get closer and closer. And I was like, get it. But it finally did take it out. And I'm glad it did, because look at this. Random market violence. And it happens still inside of today's high, inside of today's low. This low was made at 2300 hours. You didn't take out today's low. You haven't taken out today's high yet. You are still trading inside of yesterday's high and low. So there really isn't giving us anything right now. All right, I got to go. I got to cook breakfast or lunch at this point, brunch. You guys have a fantastic rest of your day. If you have any questions or concerns, as always, you can leave them down in the comment section. I do read the questions. Sometimes it takes me a day or so later to read them, but I always read them. So you can get a hold of me there and get a hold of me on Twitter. But please use the link in the description if you want to follow me on Twitter, because so far we've already had to get rid of 4 impersonators. And it really sucks because, like, the last one we just got rid of had 4,000 followers. All 4,000 people that were following that freaking dude thought they were following me. Twitter didn't give me those followers. All right? Those followers are just gone. They probably think I'm gone or something. And I'm not. So make sure you use the link in the description if you want to follow me on Twitter. I'm not very active on Twitter, but I do occasionally post tidbits that can help. I also occasionally post trades. I posted a trade this morning on Twitter. It was a little bit late for you to get involved in it, but at the same time, I'm not a signal provider. So it's just to help you try to get it as you go. That's it, right? That's all. Just kind of help you see what I'm looking at, so that way you can start to see what I'm looking at as well. You'll get there. I promise. All right. But anyways, you can leave the questions in the comment section. I will answer them. Follow me on Twitter. You know, if you want to follow me over there, make sure you use the right Twitter account, which is in the link in the description. And I thank you guys so much for your time. I mean, 50 of you stayed around for hours, pretty much consistently. So through all the rants and everything, wasn't even a real trade to take. We are still waiting on SPY. I mean, if it continues to be bullish, then I will, like I said, tomorrow, I will be potentially looking to be a buyer down here. I will be watching hourly closes right there under that blue candle, because as of right now, that is the market's range. So what I mean by that is you don't have any closes outside of this close. So for now, until you get that, this may end up being support for tomorrow. I'm not going to chase price and be a buyer of it up here. I will wait for it to come back tomorrow. If it comes back during the London session, then I'm not going to be able to get it, right? That happens. But hopefully it comes back at the open tomorrow. If we get a test of this level, we can get long, and we'll see how it works out. I will not be live for that, so that will be on you to watch. But I will post updates and stuff on the SPY if it breaks down today. If it doesn't, then 390.40 and 389.52 are the most important levels to watch for potential bullish entries tomorrow. All right. Monday we'll have new data, so if we lose it or miss it, we miss it. We'll get another opportunity or another swing at it. I promise. You guys have a fantastic rest of your day. Make sure you trade safe. Make sure you trade smart. And as always, happy trading, everybody.